Kicking off the afternoon portion of the program is Dr. Lawrence Yoon. For those of you that don't know Mr. Yoon, he is the Chief Economist and Senior Vice President of Research at the National Association of Realtors. Notice I say Realtors, not Realtors. Realtors. He oversees and is responsible for a wide range of research activity for the association, including NAR's existing home sales statistics, affordability index, and home buyers and sellers profile report. He regularly provides commentary on real estate market trends for our over 1 million Realtor members nationwide. Please welcome Dr. Lawrence Yoon.
Thank you. Very great to be here. And first I want to thank Mark for the introduction, but also because he was an NAR Research Committee member, which means that he's the one who actually directs the things that all the products that we produce within the NAR Home Buyer Seller Report, the home sales statistics, trying to assure the integrity of the data. So I want to thank Mark for that. San Diego, what a great city. It is a proper location to have this international real estate congress. Miami, of course, draws so many international buyers. But it's a little different pictures. In Miami, as everyone would know, it's a heavily Latin American buyers, European presence. But in California market, there's greater Asian buyers coming in. Canadian buyers also participating. But as you are enjoying it, and I hope you can stay to enjoy more, the great weather and just a great place to be. So what can you expect? And as an international buyer, often there is a concern representing clients, or maybe you are purchasing property on your own to say, well, is this a right time? Particularly given that there is a increased economic uncertainty across the globe. Russia is in a recession. Brazil is in a recession. China, as you know, stock market crashed in the summer and has not yet lifted up from that crash level situation. Canada may be tipping into a recession, maybe not, but it's a near zero situation in Canada. Same thing in Australia. So given this situation, what is the prospect for economic growth here in the US? And what is the domestic buying activity? So even though domestic buying activity for some is not an international angle, but that assures you that as long as there is a plentiful domestic buying, that means that there is a much solid foundation for real estate prices here in the US, giving greater confidence for international buyers. So let me quickly run through some of the data points that I find that could be of interest to you. And the bottom line is that despite the global economic uncertainty, America is in a decent shape. I use the word decent, not good or great, because it is not good or great. It is decent, but it is moving higher. And particularly given that perhaps now with the stronger dollar that is deterring some foreign buyers from buying in the US, if you are able, you may be actually in a better position with less competition in the marketplace. So let's see what we can anticipate. So I think the very basic question that people want to ask is, how's the US economy given this global economic uncertainty? The best way to measure economic activity in all countries is GDP, gross domestic product. And it's been mostly positive, blue, over the past 5 years. You see every once in a while some red. I mean, there was a massive red during the recession when there was a job losses. But once the economy began to expand, it began to go into positive blue. And we are still in a blue situation. But only problem is that we are not consistently above 3%, which is historical average. So it's been an inconsistent positive expansion. With this GDP growth, jobs are being created, which is the foundation for home buying and why I believe the real estate prices are here to stay and not go down. Some people are saying, are we in a mini bubble situation today here in the US? And I would say, one of the reasons why the real estate prices are in much better shape is that we have solid job creation. Most recent job number that came out, very strong numbers. So a job creation appears to continue, and this would be the foundation for supporting real estate activity, both residential as well as for commercial real estate in terms of leasing activity. Fresh unemployment insurance claims. This is how many people are filing for unemployment paycheck for the very first time. And is a good leading indicator about future job creation. And it is massively declining, which means that this is a good early indicator about continuing job creation in the future because companies are no longer laying off people. Sometimes you hear in the financial pages to say this company is laying off 500 people, this company is laying off 2,000 people. But in the nation as a whole, those numbers are minuscule. I mean, it's not really impacting the overall national picture, so people are not filing for unemployment checks. Very positive sign about future continuing job creation. Some states are doing better than others, but Utah is doing well. Idaho is doing well, but those are small states. I mean, those are very small states, but if you look at the big states with big exposure to international, it's really the California and Florida, and California is on the list. Let me see, 1, 2, 3, 4, 5, 6, number 6, while Florida is number 4. So both Florida and California is in the top 10 job creating states. So of all the real estate market, you are saying, where could there be trouble? Well, there will not be trouble in California or Florida or Utah or Idaho. But again, the big states are the Florida and California, and they're right at the top 10 markers. San Diego jobs, this is what it looks like. And what to note here is that it has already surpassed the prior peak employment level and still growing very, very fast. So one sees that today's job situation at 1,400,000 is about 200,000 above what it was during the downturn. So 200,000 additional jobs into the local market, which is the reason why you see some condominium development in this area, and it's selling for $1 million or $1.5 million. Well, it's because of job creation, and these jobs are in the San Diego are not necessarily a service-related job that pays low salaries, but medical technology or wealthy people who want to just say this is a great vacation location. So these are people who are coming in with deep pockets and buying properties. Some of you were in Miami area, so the job market in Miami is also recovering, but is recovering in a sense a little less strongly than San Diego, or maybe I should say a little differently. There was a bigger decline in jobs in Miami. Now they're coming out of that bigger hole to come out, but San Diego had a milder dip, so San Diego is really surpassing the prior peak, while Miami is just beginning to pass their prior peak level. Regarding the monetary policy, because now there's a question about, well, what will the Federal Reserve do? Some people are saying Federal Reserve may raise interest rates in December. I'm guessing maybe it is a 50-50 chance that Federal Reserve will raise it, but it is high drama for a very small reason. Why? Because first, from foreign buyers, most foreign buyers are buying all cash. They're saying mortgages we don't need. I have cash to use. So they don't care about mortgages. But the domestic buyers are dependent on the mortgages. So what happened to the domestic buyers? Well, what you see in this chart is that Federal Reserve controls that red line, while the mortgage rates are blue line. And what the red line moves, the blue line do not necessarily move 1-for-1 in direct proportion. So therefore, it doesn't matter what Federal Reserve does in December, in my view, is just a high drama. For a commercial real estate practitioner, maybe it matters because you have short-term borrowing, things tied to LIBOR interest rates or more 10-year loans. But 30-year loans are really not really dependent on what the Federal Reserve is doing. And therefore, I would say it's just more of a high drama. I think the better question is, when will the Federal Reserve raise interest rate the second time, third time, fourth time, fifth time, because we are in a rising interest rate environment for the next 2 or 3 years. So these bottom rates are done, and the interest rate will be slowly moving, and then blue line will steadily increase, but not for one-for-one relationship. US dollar is really strong now. Very strong against the Russian ruble or Brazilian real or reais. So it has really greatly strengthened, which means that it's more difficult for foreigners to buy property here in the US. I think you will see fewer Canadian buyers for sure. Chinese buyer is very interesting because I have actually spoken with many Chinese realtors who work with Chinese buyers. Ever since the stock market crash, I asked them, okay, with the US dollar stronger than the Chinese yuan or the directionally, what's happening to the Chinese buyers? And the response is mixed. Some people are saying, well, now they don't have enough money, so they're pulling back, while others are saying, because of the uncertainty in China, they want to take money out of China and put it in the US. So right now it's a sort of net neutral situation as regard to the China at the moment, but dollar is strengthening, and dollar could even strengthen even more because Federal Reserve will be raising rates, while Europe is not raising rates, Japan is not raising rates, other countries are not raising rates. So the country that raised interest rates is the one where you see a stronger currency. That's where the dollars are going into, so you can anticipate even a stronger dollar situation. This also provides for at least some Americans who want to buy abroad. Right now, Brazil property prices are cheap. So it may be a very good opportunity for people who have a longer-term outlook about Brazil 5 or 10 years from now, because Brazil will come back. It's not this year, but right now the property prices are very low. So to the extent that you want to have a connection with some Brazilian, to say you want to buy some property while it's very low price, that may provide some opportunity. One of the reasons why the Federal Reserve and mortgage rate do not really move together is because mortgage rates are also influenced by inflation. And today we have zero inflation because low gasoline prices. But watch out, the rents are beginning to rise at 7-year high levels. And this will begin to push up inflation steadily, and this will make the mortgage rates higher. So it's not the Federal Reserve that pushes up the mortgage rates, but it will be the rising rents that will begin to push up mortgage rates. And the rents are expected to go up even higher because rental vacancy rates are at a 30-year low levels. So the rents will continue to increase, and that will provide some upward pressure on rents. So monetary policy is Federal Reserve hike in December, 50-50 chance, not that meaningful, but the longer-term direction is that they will do the second interest rate hike sometime in the spring, another one in the autumn of next year. So it will be a 3-year cycle of raising rates, and therefore the 10-year Treasury borrowing rates will rise, and the mortgage rates will be steadily increasing. Housing market, this is the total home sales in America. This is the chart that you need to show to your clients to show that it is recovering, but it is not a frenzy bubble conditions. Look at 2005. It is not there. So some people who say we are in a housing market bubble, they are misplaced because we are in a recovery. It's not an expansion. It's not setting a new peak levels. It's just a recovery, and today's home sales are still about 25% below what it happened during the frenzy period. So we are not in a frenzy period. It's a much more moderate recovery. Home price situation, Miami and San Diego. So San Diego is the blue line, Miami is the red line. But both market, you see there was a decline. But now it's rising. And my forecast is that it's going to continue to rise. So people are not buying a depreciating asset. It will be an appreciating asset. First, again, it's not a frenzy, so the buyers will not suddenly collapse. There will be steadily more buyers coming into the market. And furthermore, the last bullet point. So actually, let me start from the top. Home sales are moderate recovery, not a frenzy. New home sales are only half the level of what it had been. We have a very tight credit conditions and also much increase in all cash transactions. All cash, no chance of default. And the last bullet point I think is very important. During 2005, we had an oversupply, too much production. Today, we have undersupply. There's not enough production to go around. Inventory of homes, because we're not producing so much, is trending low. Another indicator, simple supply and demand, which says that with insufficient supply, prices cannot go down. So this is countering any people who may say that we are in a bubble. And this is the builder activity. So you see some growth in the building activity in recent months, but it is well below that red line. Red line is what we need to reach to get to the equilibrium. So we are not near anywhere equilibrium regarding the building activity. And also most of the building activity is on apartments. It's not on single family or condominiums. So people who are building condominiums, single family, they are not having any trouble finding buyers. So the forecast is that no economic recession, continuing economic expansion in GDP translates into job creation. More jobs, more jobs, more jobs. But the inflation rate will be somewhat higher, and that will begin to push up mortgage rates. And for housing, there's a lot of numbers here. This is all national figures. But what the numbers are indicating is that we are going to see probably about 3 to 5% increase in home sales nationally. 3 to 5% increase in home prices. But in San Diego, because job creation is stronger in San Diego, you'll probably do better than national average. So look at the local market, job market condition compared to the national. If you are doing better, then you will do better than the national forecast. Both Florida and California is doing better than the nation in terms of job growth. So you will be easily outpacing the percentage gains that you see at the national level. International buyers, we saw that growth in 2015, those were mainly due to the Chinese buying very expensive properties. But we do anticipate in 2016 some decline because the dollar is just too strong. Chinese buyer may continue to come in, but there will be fewer European buyers and I think fewer Latin American buyers from Latin America. So we may see some decline, but you see the long-term increase in trend for international buyers. This is the actual number of transactions, not the dollar volume, because Chinese were buying expensive property, that pushed up the dollar volume. So we actually saw some decline in 2015. And the international buyers tend to buy much more expensive properties. Let me see here, this one. On the bottom scale, it doesn't show, but it shows like where they are buying, like Texas, Florida. So it doesn't matter wherever they're buying, the foreign buyers are buying things that are more expensive than domestic buyers. So to the degree that you have foreign buyers, you will have better chance of getting that additional commission income because it's at a higher price points. And regarding where they are buying, so Asia, those are primarily from China. I mean, there is some element of Korea and Taiwan, India, but it's principally China. And then Europe, Britain is dominant. Germans are very popular. I mean, they like to go to Florida. And then Latin America, they are going into the Florida market or the Texas market. And Canadians, I mean, they're just going all over, whether Florida, Phoenix, Arizona, Nevada, California. And the major countries of origin, Canada was always the big leader but notice how fast China is catching up. So watch out for China. I think that China would be the big picture. Venezuela is always in the top 10. Their economy stinks. That is why Venezuelans want to take their money out of Venezuela and bring it to the US. So interestingly, the Venezuelans are always in the top 10. And the top 4 states that draw the most interest is the Florida, California, Texas, and Arizona. So I'm glad that Miami Realtors held their international congress, and San Diego will be perfect ideal location to hold international conference here in California. Regarding where they are coming from, I mentioned that this is related to the San Diego market, San Diego specific market. You are seeing that China is a big presence. Mexico is the second largest presence in just San Diego market. We have data cut for many other cities and many other markets, but you have to go to the websites to figure that out. So thank you for listening. Thanks for your patience. And again, I think it's going to be a great year in the upcoming year. Thank you very much.